Wall Street Journal just came out with an interesting article saying that inflation's been around 2.5% for the last 5 months. And as fears of a wage price spiral cool, it'll be interesting to see where this CPI data comes in at. The bond market is already starting to price in a Fed pause, with crypto markets starting to see a rebound, and in the case of Cardano, a slight run into the afternoon about 13%. Even though it's going to take a lot more than that to get us back to all-time highs. With that, let's take a look at the data.
Okay, just a quick update on key events this week. Banks begin reporting Q4 2022 earnings. 2, Fed Chair Powell speaks on Tuesday. 3, Fed member Harker speaks on Thursday. 4, December CPI is also released on Thursday. And then consumer sentiment data is released on Friday. Markets are starting to kick off 2023 with a ton of excitement. Here are the target rate probabilities based on Fed Fund futures. This is slightly old. This week we're actually a little bit on the lower side. So you can see the probabilities at 4.5% to 4.75%, which is the 25 basis points or a 50 basis points. And I think with some of this new data, with wages being actually updated down, we're going to be more likely to see a 25 basis points. And once we go to the FedWatch tool, you'll see kind of how that's been updated. So here's kind of an update of the FedWatch, and you can see here that the majority of people think that it's going to be a 25% basis hike. Now, one of the things that we have to watch and to be careful about with the Fed raising rates is how much the banks actually borrow. So the following lending proclivity is hitting interbank activity. When banks start dealing with each other, it's not a great sign. Counterparties are slowly but surely going directly to the Fed's discount window. A credit crunch is setting in as liquidity goes from bad to worse. And you can see from this chart, we're not close to where we were in 2008. But what we're starting to see is a little blip on the map. Now, as Powell speaks on Tuesday, U.S. CPI inflation data to be released on Thursday, expect a 0.3% rise for December core CPI. Expected 25 basis point increase, half point hike is possible still. And then expect more of the same in terms of CPI and effects on asset prices. The higher we hike, the more the market's going to go down. We're starting to price in a 25 basis points and that's why we're seeing some of this volatilities and the jump in crypto, and we're probably going to see a jump in markets today. And one of the things, and so we're seeing this expected 0.3% rise, and the UK market, Europe actually had a higher inflation data also. Now, if you've been enjoying these videos, go ahead and give this video a like. If you could, subscribe to the channel. I'm a small channel. We're trying to grow, teach people what we know, and just get better prepared for what's in store for us in 2023. Thank you.